All right, team. It is Tuesday, December 18th. Let's go over everything that we have seen today. We are adjusting. Today was a great day of preparation for what's upcoming, and I am so excited to be able to apply what we went over. I'm so excited to be able to apply our strategy and get you guys ready for 2019. We have 1 week left until we move over basically into the holiday weeks. We have the 19th, the 20th, the 21st. Then, as we know, we have a half day, the 24th. Christmas is on 25th. And then we move over again on New Year's Eve on Monday, and then New Year's Day, which is, again, the market is closed on Tuesday. So it's going to be a little bit interesting over the next week and a half or so with basically Monday and Tuesday, and then moving over again to the following week with Monday and Tuesday. This is basically our little winter break that we have coming on up. I'm very excited to be diving into 2000. Entire DekmarTrades strategy. We've talked about this many times today, but I want to talk about all the plays today and basically just recap a little bit of everything. So let's start this from scratch. Starting from scratch, we're going over our morning newsletter. We started with Happy Tuesday today. Welcome back to DekmarTrades. The markets are falling, stocks are being shorted, and it's time to adjust our trading. To have a bear market strategy. What does this include? Hey, if you want to go long, you'll be playing hot news and the #1 or #2 top gainer for a very quick penny stock pop. Lock in your gains when you have them. As you guys know, we have been seeing every single day very quick rips and very quick runs on all the penny stock pops and all the penny stock, best gainers. Every single day. It doesn't matter if we're in a bull market or if we're in a bear market. Penny stock traders are going to want to trade. And we're going to see people who are not going to short regardless. There's always going to be groups out there. There's always going to be people with big accounts out there. There's always going to be traders who see good news and they're going to buy it because, again, it's good news. It's understandable. People see good news and they say, wow, this follows the criteria I like. It has, a lower float. It has a good credible press release. I'm going to buy it. And I assume other people are going to buy it as well, which moves the stock on up. Now, even in the bearish of markets, this is going to happen. Even in the bearish of markets, we're going to see people buy low float plays and basically pump them on up. And guess what's going to happen, though? They're going to come back down. And guess what's going to happen even with the good press releases? They're going to come back on down. And a lot of traders, and this used to confuse me all the time as well, where I used to say to myself, what's going on? I'm playing these plays perfectly. Hey, phase 3 trials. This stock came out with positive phase 3 trials, one of the best press releases there is. This stock came out with positive phase 3 trials 3 months ago and went on a $20 spike. Why is it when I hop in on this one, all of a sudden, now it's falling $2? What's going on here? It's because we need to be willing to adapt, right? So we're still going to see great spikes. We're still going to see great rips, but they're not going to be long-lived. And we're going to go into each one of these examples as well. We're going to see very quick penny stock, pop. So if you're a trader who is one of those people who refuse to go long, do you guys have opportunity to go ahead, or you guys are refusing to short? Do you guys still have opportunity to make money? Absolutely. But it's basically buy at the bell. You guys have to be buying at the bell, buying at the start to maximize your profit. And what are you going to be doing? You're going to be buying the #1 or #2 top gainer because this is where the majority of the mob's at. This is where the majority of the hype's at. B, you're going to be able to short these penny stock top gainers at the first sign of resistance. The majority of these spikes will fade right back on down. So this is what I want to do. I would say I personally like to start doing the B option. Right now, guys, I'm switching my account from a cash account to a margin account. Last year, I kept my account on a cash account throughout the whole entire year. Why was that? Because the markets were more on the bullish side, right? If we look at the SPY, last year, what did we do? Last year, like even from June, let's just start from June right here. Climbing, 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 climbing. And look at, our last area of supernovas, ALT, September. AWSM happened in September. SAEX happened right here in September. AWX, this happened, right back here in June. And when is that happening? When the SPY is doing, absolutely great, climbing, climbing, climbing. Right now, we're not seeing that, right? Right now, we're not seeing that the stock, that the SPY, is able to hold on up. We're seeing this thing fall and fall and fall. So if we're seeing this thing fall and fall and fall, let's not assume we're going to be able to get breakouts. This is queen B, as I stated. We cannot go against the current. If we're in a boat and we're trying to go long day after day after day, what are we doing? Paddling right upstream. Our arms are eventually going to give out on us, and we're just going to go right downstream, absolutely backwards. And that's not what we can do. And that's why I've lost my last 3 trades on my small account challenge, last week when I've been trading. And it's taken me a little bit of time to be like, hey, you know what? I got to stop going against the stream. I got to stop going against the current. Let me, again, open up a margin account, look to short, follow my shorting strategy. Again, last year, $4,000 to $80,000 small account challenge. You guys can watch that whole entire small account challenge. Look over every single P&L I have on that small account challenge on this video right here. That says a 24-year-old trader turns $4,000 into $80,000. Make sure, again, you guys go ahead and check it out. That's absolutely perfect. So make sure you guys go watch this. Make sure you guys go check it out. I go into a whole entire lesson. It's about an hour long, and make sure you guys go watch that. And I'll actually post that right now in chat if you guys want to go do that. So there's that right there. Now, with that being said, I cannot do the same exact thing I did last year because conditions are different. You could see the SPY falling. Last year was more of a bullish market. Right now we're switching into a bearish market. That's why if I stick with the same strategy, I'm going to lose. And I've stated this before, and you guys have already heard it before. This is kind of just, a little bit of a reinforcement, right? So I can't do the same thing that I did last year because we don't have the same setups. We don't have the same conditions. What I'm going to do a lot more is going to be doing option B. We have a couple different options. A, I buy right at the bell, the number 1 or number 2 top gainer for a quick morning spike. Lock in your gains when you have them. Don't be greedy. We have option B, look for shorting opportunities on these pops at resistance. The majority of the spikes will come right back down. Or C, we play inverse ETFs that are within our price range, maybe like TVIX, UVXY, SSQQ, or SQQQ. I personally want to do B. Now let's break this down. So I wanted to test myself today, right? I wanted to test myself today, and I wanted to say to myself, what? Let's see if my, my strategy is going to work, right? Let's see if my strategy is going to work. Let's see if it's, this is going to be worth my time. So let's. What I did was I wrote down all the top gainers today, and I wanted to say, all right, let's see. So let me put back on our to-do. Here's our pre-market movers, right? Let's see if they're going to come up. Okay, so here is our pre-market movers. Let's see which ones are going to hold on up. Now we said, based on our strategy, the number 1 and number 2 top gainer should either go on some quick rips and then dump right back on down. All right, and what did we do? We mentally traded MRIN. And MRIN right here, what did we see? Absolutely beautiful. Absolutely what we wanted was what? Let's go back time frame. Let's just put this in a 1-minute time frame right here. Boom. 1-minute time frame. Quick morning rip right up to $5. Absolutely beautiful short. MRIN, we said, guys, where would be the best short on this play? $495. Why $495? We just want to look at the first area of resistance, right? All we're doing is following option B. You'll be looking to short these penny stock pops at the first sign of resistance. The majority of these spikes will fall right back on down. Option A was find the number 1 or number 2 top gainer for a very quick, pop, lock in your gains when you have them. Option B is just shorting that number 1 or number 2, right? So MRIN, straight up move, 200-day moving averages hit. Everyone sells it off. Beautiful profit, right? MRIN, beautiful profit. All right, what else do we have? AETI. This stock didn't even have a morning spike. This stock just opened up, dumped on off. If you're in on the short side, beautiful profit, right? BIOC, what did we do on this play today? We put this stock on a trend line. As you guys can see, the trend line's already in place. And all we're saying is, guys, where would we short BIOC if, again, we're already on a shorting account? Right when the trend line cracks. We put a mental trade at 133. We shorted the stock at 133. It fell all the way down to 107. Beautiful. All we're going to look for in the future, trend line cracks as well. So the gain that is holding, put it on a trend line. Right when this thing starts looking a bit weak, crosses the trend line, short it. Short is going to take over. In the bear market, it's going to be an easy win nearly every single time. Absolutely beautiful. RSLS went on a quick little penny stock pump. Why did RSLS go on a quick little penny stock pump? Because this play went from 59 cents down towards around 45 cents. Why did it get on a pump though? Because nothing else was moving at this time. And as we know, RSLS, very low float stock, something you must learn about day traders. And it's something a lot of experienced traders know. If there's not a stock holding up, if there is a play that's holding on up, or if there's nothing holding on up, guys, let's say the penny stock market's open, the stock market's open in general, and we don't see anything going on, turn your eyes to the lowest float stock, because the lowest float stock randomly is going to get all this sort of volume. Why would that happen? Because the low float stock is the easiest to push around, right? It's the little guy. So if a lot of volume moves into it, or even a little bit of volume, it could easily hit new highs of the day. It could easily start moving up, and that could attract people towards it. It could hit the high of the day momentum scanner. I buy it, you buy it, Fred buys it, Sean buys it, whoever buys it, right? And it keeps going for no other reason other than it's just a low float play. But you could still make money on it. It just basically turns into a little bit of a random buy to momentum to basically then a pump, and then it dumps right on off. So again, that's kind of what happened on RSLS. Nothing was really going on. Got a little bit of a pump, came right back on off. But is there opportunity on the long side? Yeah. You know, MRIN went on a quick little pop right here. But you know what? Dumped right down at resistance. You know, BIOC, you know, nice little rip right here. But trendline cracked, right here. In this market, it's a pretty predictable area about where you guys can go ahead. What's the huge problem with new traders? The big problem with new traders is they always show up late, right? They're always chasing plays, right? They're always hopping in on stocks, and they're always buying at the top, and they're saying, oh, you know, I keep buying at the top. I keep buying, and every stock that I get into keeps falling, right? What did I talk about? We got 5 senses as a human. We got sight, smell, touch. We hear and taste, right? Now, what's the one we rely most on? We rely most on our sight, our sense of sight, right? So with that being said, a lot of us in stock trading, we don't believe that a spike has happened until we see it, right? The best long traders, the best people who are stock traders that can go and buy low and sell high, know setups. They know where people are going to move in. They know the squeeze patterns, and they can basically see the spike before it happens. Most people need to see the spike to believe there is a spike. But guess what happens when you already see the spike, right? Guess what happens when the stock has already gone from, I want to draw it out right here, as the stock has already gone from, you know, this mark, you know, it starts going here. Let's say we have a little bit like of a play. We know a very good trader may say, oh, wow, a big spike's going to happen. A rookie trader will say, oh, wow, a big spike happened, and they buy here. A good trader buys here. A bad trader or a new trader buys here. Guess what happens? It starts dumping on down. The great thing about shorting is you're allowed to be late. You're allowed to chase. Why? Because you're probably going to be shorting at the top end. So if you're the type of people that are just like, oh, I keep buying at the top. Every time I buy into this play, it keeps falling on down. Well, guess what? You're in luck, baby, because you're moving into a little bit more of a bear market. So every time you think you're about to buy into it and it's going to start moving it down, guess what? It probably is going to start moving down. So you might as well just start shorting that instead. So I was saying earlier, you know, some people hit me up. They're like, are you nervous there's like a bear market at all? Are you nervous we're not going to see any sort of spikes? We're going to see spikes regardless. It's just the spikes aren't going to hold. And the spikes are going to come right all the way back down to where they started. So I'm pumped. I'm excited. I'm fired up. Because this just means, again, we have an opportunity to profit. There's always going to be spikes every day. It's just the spikes don't hold. And if we know that they're not going to hold, that's when we're going to be able to make money. The reason people lose is because they think, again, the spike, okay, maybe today it'll hold. Maybe today it'll go on that $100 rip. Maybe today I'll be able to do this. We can make money both ways, guys. We can make money both on the long side and on the short side. Why limit ourselves to one side and limit ourselves going up against the current of the river, right? So there's no point to do that right now at this time. And I want you guys to understand that. The reasons why, and I've talked about many reasons why people blow up their account. But the reason why a lot of people blow up their account is because when they first start trading, one strategy works. I'm buying here, it's working. I'm making bank. I love stock trading. I'm buying, I'm making money. Woohoo! This is great. 3 months go by, and guess what happens? You're doing the same strategy, and then you're losing. You're losing. You're losing. That's when you get me. You know, you hit me up on a text or an email or something, and you say to yourself, you know, Dek, I'm doing the same strategy I've been doing since I started. I was able to make $10,000, you know, in the last 3 months. Now I'm down, $15,000 in the last month and a half. What's going on? It just seems like everything stopped working. Well, guess what? Market conditions change. That's why I can't stay on a cash account right now. That's why I can't go after, breakouts at the top. I can't look for U-shaped breakout patterns. I can't look for trend line bounces. I need to look for shorting instead, right? That's like saying, as I said, market conditions are like the weather. That's like saying in the summer. In the summer, you're like going out in a t-shirt and shorts. You're having the time of your life. And then all of a sudden you hit me up in December and you're like, Dek, I'm cold when I go outside. Why am I cold? And it's like, well, what are you wearing? I'm wearing a t-shirt and shorts. Why am I cold? I don't understand this. This earth doesn't make any sense. It was hot a couple months ago and now I'm cold? What is going on? Right? Things change and you need to be willing to adapt. Put on a few different layers. You're going to be okay, buddy. I promise. You put on a hat and a coat and you're like, Dek, that makes everything so much better. All right? So again, that's all we're going to be doing. We're just going to be putting on our coat and putting on a hat instead. So right now, we are seeing, a lot of these plays. Short there, MRIN. Short here, AETI. Basically just, fall right at the start. The only, market making, the only long side is this, narrow candle right here. AETI, zero chance of profiting on the long side. BIOC, again, does have opportunity, but again, you have a lot more shorting opportunity. It's like even on these top three, what looks better just to the human eye? A lot more red right here. AETI, a lot more red right here. BIOC, a lot more red right here. Even to us just sitting here, we can't fight the fact that, things are going to fall. So let's make money off of it, right? So, it's absolutely beautiful. I'm pumped up to see what's going to be coming on up. All we're going to be doing is putting on the coat. We're just putting on the hat. We're changing a little bit of our strategy to find something that works. Because right now, if we stick to what we're doing, we're going to keep losing our account. We're going to, lose our money, and that's obviously not where we want. Adapt as a trader, adapt to conditions, make sure you guys are staying profitable. Very exciting and absolutely awesome job.